In today's video, we are talking about why you may not need a financial advisor. So if you are considering getting a financial advisor, or if you already have one, but you're thinking, I don't know if I actually need one, then today's video is for you. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier and without bias, since I do not work for any third parties. All right, so let's dive in and talk about these 5 different reasons on why you may not need a financial advisor. And I do want to clarify that a financial advisor is someone that manages your assets for you, manages your investments for you, or they could have a flat rate that they charge to give advice to you, or they could just sell you certain products, certain investments that they make money off of, versus a financial coach or a wealth mentor who is not going to manage your assets for you, and they are just going to work with you and help educate you on how you can manage your investments. And as I'm going through these reasons, I just want to kind of specify, if you do have multiple estates and a large number of different companies that you're invested in, or just very complicated investments and lots of things going on, then a financial advisor may be a good idea. But honestly, if you have $1 million worth of investments, or even 5 million, possibly even 10 million, and you don't have a lot of complicated investments going on and a lot of different types of investments, then honestly, we can definitely invest our own money and be very successful with doing that. All right, so the first reason that you may not need a financial advisor is because financial advisors historically underperform the market. So if you are wanting to work with someone that is managing your investments for you, you would definitely want them to outperform the market or outperform what you could do on your own. But unfortunately, the majority of financial advisors do not outperform the market. So you are paying more for their service, but you are not receiving that higher return on the back end. So honestly, if you are willing to just take a little bit of time and learn how to manage your own investments, learn how to invest your own money, then you can actually essentially save money, because you're not paying someone else a percentage of your investments to manage them for you. You can do that on your own and actually outperform or even follow the market. And you're essentially saving extra money because you aren't trying to outperform the market and outperform the fee you're going to be paying with a financial advisor. And we'll get into this later in the video. But I just wanted to bring up this point that a lot of people think, oh, well, if I'm working with a financial advisor, someone who has different certifications, then they should definitely be able to outperform the market and get me really high returns. But historically, that has not been the case. So let's move to point number 2. And this one is, you may not want to pay someone when you are losing money, right? If you're working with a financial advisor, they are going to take their percentage. If they're managing your assets for you, they are going to take their certain percentage every single year or quarter, depending on how they have it set up. But whether you are making money in the stock market or you are losing money in the stock market, they are still getting paid no matter what. So while, yes, they want to have your investments increase over time, there's no way they can guarantee that. And the market doesn't always go up. So they will still get paid whether the market is going up or down. So honestly, I don't know about you, but if my investments are going down, I don't want to take an extra chunk of those investments that are already losing money and pay that amount to someone else. That's going to even further decrease my investments, because I can't leave that money that I'm paying to someone else in the market to recapture those gains later on. That money is gone. It's been given to that financial advisor. So that is kind of a hard thing to stomach when you are seeing your investments drop and then you have to pay someone that is managing your investments and see your investments drop even further because of that. And then item number 3 on why you may not need or want a financial advisor is because you don't want to be paying someone 1% or even 1.5%, maybe even 3% of your money to someone else for the rest of your life. Once we sign up with a financial advisor, then they are managing our assets for us and we have no clue what's going on. We haven't decided to educate ourselves and learn how to invest our money. So we are relying on someone else for the rest of our lives, which is a really long time when you think about that. And if you are paying that person 1% of your investments every single year, that is going to add up to thousands or even hundreds of thousands of dollars over the year that you are paying the advisor. And just to go a little bit further into this, I want to show you, this is from the White Coat Investor. He has a really great article about how much you're actually paying a financial advisor. He talks about a 1% advisory fee may not be that much, but he shows the statistics. So he shows this graph. And in this example, we are looking at someone who is charging 1%, a financial advisor who's charging 1% of the portfolio every single year. And then we are comparing it to a do-it-yourself investor, someone who just decided to invest on their own. And we are saying that they have the same portfolio and they both invest $50,000 a year for 30 years. So at the end of those 30 years, the do-it-yourselfer, the person who is figuring out how to invest on their own, they will have $3,488,039 left in their investment account versus someone who is using an advisor. They are only going to have $2,916,417. So by using an advisor, that person is paying about $572,000 to use that advisor. So that's about 16% of this person's retirement. Divide that out by 30 years, and we're talking about $19,000 a year just in advisory fees. And like we talked about before, they aren't even outperforming the market. So you're paying them extra to not outperform, which means you are losing that money right away. And when you look at it for a period of 30 years, which if you are starting to use a financial advisor, then most likely you are going to continue to use them. So it would be for over a period of 30 years or even longer. So you are giving them about $572,000. There are a lot of things I could do with $572,000. So keep that in mind as you are considering whether or not to use a financial advisor. And then item number 4 on why you may not need a financial advisor is because you would like investing to be simple and not complicated. When I was actually working with a financial advisor before I started learning about investing on my own, I felt like he just made things so complicated. And unfortunately, I feel like a lot of them do that so that people will continue to rely on their financial advisor and think that they can't do it on their own, that investing can't be simple, and that they need to be switching up their investments all of the time, or switching in and out of products, or setting up different accounts, things like that. But if you really want investing to be simple, you can definitely do it on your own. And honestly, I work with people to help them do this, to help them learn to invest their money. So if that is something you're interested in doing, but you do want a little bit of guidance and not someone that is going to take a percentage of your investments, I have a link below in the description. You can click on that and check out how you can work with me. But nonetheless, we can actually keep investing very, very simple and make really, really good returns. I've seen that with my own investments. So I'm definitely talking from personal experience here. Investing does not need to be complicated. And a lot of people in the finance arena or area try to make it complicated so that you feel like you won't be able to understand it, that you won't be able to invest on your own, and that is just not the case. So if you want investing to be simple, you can definitely invest on your own and keep it simple and get those great returns. And then also going along with that, if you want investing to be simple and not be afraid of it, that's another aspect that I feel like a lot of financial advisors, unfortunately, put this fear in people that, oh, you need someone else to do it for you. There's no way you'll be able to be successful. It's very complicated, and there are just so many different investments out there. You'll never figure out which ones to make and be able to make good returns. And that's just not the case. There have been so many people that I know that I have actually worked with, and people that have been my mentors that have been successful with investing on their own. It just takes a little bit of guidance and education, and it is definitely possible. All right, let's move to item number 5. And this one, I find this one to be the most interesting because I personally don't want to be taking advice from someone that is not above where I want to be, or that they are at least where I want to be. And a lot of financial advisors are not where I want to be, right? So if I am deciding to work with someone, I definitely want them to already have created $1 million net worth. I want them to already be financially free. I've achieved those things. And I don't want to be taking advice from someone who has not achieved those things. So if you are leery of taking advice from someone that is not where you want to be, then you may not need a financial advisor, because a lot of them are not in those positions. They have not successfully invested their money, even though they are managing other people's money. It is crazy to me and unfortunate at the same time. So we just want to be careful who we're taking advice from, let alone who we are letting manage our money for us, because money is going to be with us throughout the rest of our lives. So if we can just take that initiative and learn a little bit about how to manage our own money and how to invest our money and be able to keep it simple and even automate it, which is what I teach my clients to do so that it actually gets done, then we are going to be in a lot better position, because we will not be relying on someone else who is not where we want to be to make those decisions for us. Because if we don't have the education, then we aren't going to know the questions to ask or what we should even be looking for with our investments. We are the ones that are going to care the most about our own money. That is a fact. That is just how it goes. We want to make the most of our money. So honestly, for me personally, I have found that educating myself about investing has made a huge, huge difference in my life, and me being able to become a millionaire and become financially free, because I wasn't paying someone to manage my investments for me for years and years. I did it for a little bit, and when I figured out what was really going on and how much they were actually charging me and what investments they were putting me in, which were not good for me, then I decided to take matters into my own hands and manage my own investments. And since then, I've seen great returns. I've seen even over 100% returns. I'm not saying that happens every time, but if we are managing our money, then we are able to keep the majority of our own money, since we're not paying that fee every single year to have someone else manage our investments for us. So we're actually able to make higher returns. We don't have to beat the market. We can actually just follow the market and be fine. But if we're paying someone else to manage our investments, then we need to outperform the market. We need to have a higher return so that we can make up for the cost that we are paying. All right, so these are the 5 different reasons on why you may not need a financial advisor. Comment below and tell me what reasons I have missed. And if you are interested in making your money work for you and you want some help on being educated and just kind of having a mentor or a guide, definitely click the link below in the description and check out how you can work with me. And if you found this video helpful, make sure to hit that like button and hit the subscribe button. And don't forget to share it with someone else who would like to hear this information. Thanks so much for watching. I'll see you in the next video.